Hi, everyone. Well, thank you so much for joining us today to mark the launch of our 2021 Exchange Benchmark Report. We have an awesome panel lined up today from some of our highest rated exchanges who are going to discuss how trading venues have evolved and what distinguishes lower risk exchanges from their competitors. My name is Alissa Ostrove. I'm the Chief of Staff at CryptoCompare. For those of you who don't know, CryptoCompare is a leading digital asset market data company. We cater to corporate, government, and retail clients. Before I introduce the panel in just a couple of minutes, I have the pleasure of announcing our report and sharing some of the key findings, as well as our latest ranking of exchanges. To provide a little bit of context for those who aren't familiar with the benchmark, we first developed our exchange benchmark in 2019 at a time when the industry was increasingly scrutinizing exchanges and the reliability of exchange data. After growing concerns of wash trading and uncertainty about what volume data could be trusted, we decided to pioneer a new approach to evaluate exchanges without considering volume as a metric. So our approach was to determine holistically which venues we could trust on the basis of their reported data to allow us to gauge which exchanges we could also include in our aggregated price indices. So we developed a comprehensive methodology that combines both qualitative due diligence metrics and quantitative metrics across 68 different data points. This has grown since we first launched the report, and we've been able to make amendments and improvements from our conversations with research institutions and regulators and really a wide range of industry participants. So today actually marks the 5th exchange benchmark that we've released. And we aren't going to spend this time going through the whole report. We have an awesome panel for you, but I wanted to just share with you some of the key findings, which have been really positive. I do encourage everyone to have a read. You can view the report on our website at data.cryptocompare.com/research. I will try to also put it in the chat toward the end of the session, but you can explore firsthand our methodology and our findings. But really our main takeaway from this report is that top tier exchanges, so for us, these are those that receive a AA, an A, a double B or B ranking, are increasing both in number and in market share. We've seen a 13% market share gain since our last report in July in exchanges meeting this threshold, and also an increase in the number of top tier exchanges themselves. Along with that, we've seen fewer hackings and improved security, improvements in data transparency, KYC stringency, and transaction monitoring. So really positive across the board. So now I'd like to share with you our latest top list. We ranked more than 160 exchanges for this report and are pleased to report that 6 exchanges received our highest tier ranking, our AA ranking. And it really is extremely close within this tier, but our new top list now includes Coinbase, Gemini, Bitstamp, Kraken, itBit, and Luno. We've been really encouraged to see the overwhelmingly positive engagement from exchanges around this report. And in this spirit, we wanted to allow you to hear directly from the exchanges what they're doing and where they see the industry going. So yeah, with that said, I'm delighted to introduce a panel representing our 4 highest ranking exchanges. Moderating this panel, I have the pleasure to introduce Larry Cermak, who is the Director of Research at The Block. He's got some great questions for the panelists, but we'll also be taking your questions through the Q&A function on Zoom at the bottom of your screen. So feel free to type them in for the panelists there. And with that, I will turn things over to Larry to introduce the rest of the panel.
All right, thanks so much, and thanks everyone for coming. I think we're going to have a great conversation today. I'm joined by Vishal from Coinbase, Chris from Bitstamp, Dan from Kraken, and Dave from Gemini. I think I just want to start by briefly giving a chance to all the panelists to quickly introduce themselves and the role they have at the companies they work for. One thing I want to remind everyone is that Vishal from Coinbase, he won't be able to speak entirely for Coinbase because Coinbase is in a quiet period right before eventually going public. So Vishal will only be speaking on his own capacity and not be representing Coinbase. But we can start with you, Vishal. If you can just quickly introduce your role at Coinbase, and then we can go to Chris, Dan, and then Dave.
Yep, quickly came from traditional finance, built out electronic trading businesses, specifically in volatility products. Most recently, I was at Circle, where I was in charge of launch and growth of USDC. And most recently, I'm currently the head of exchange at Coinbase.
Cool. Chris?
Yeah, hey Larry. So I head up global business development at Bitstamp, so look after our corporate and institutional clients. Been at Bitstamp a couple of years. Prior to this, I was with a company called Token, and so that's where my crypto journey started. And yeah, really happy to be on this panel today.
Okay.
Cool. I'm Dan Held. I've been in the crypto space for 8 years, worked at 5 different crypto companies and have had 2 exits. I also have had a brief stint over at Uber where I was on writer growth and growth marketing. That is essentially what my function is at Kraken. So what I look at is optimizing the user journey from hearing about the Kraken brand all the way through to placing their first trade. So making sure that experience is seamless, smooth, and we acquire customers as efficiently as possible.
Cool. Then Dave?
Hi, everyone. David Abner from Gemini. I'm the global head of business development. I'm actually reasonably new to the firm. I've got 90 days of tenure here. I come out of 25 years in finance, the last 12 of which were on the asset management side, helping institutional investors implement and understand how to build portfolios of ETFs. So I think the market, the evolution of the crypto market is very similar at a similar stage. So I'm translating a lot of that knowledge into what we do today.
Awesome. So I want to start with just looking at the general trends. So, we track volumes at the block as well. And in January, I think the volume that we track about tripled from December. And in February, it looks like it's going to surpass it again. So we're at pretty much all-time highs when it comes to volume. How has the market really changed recently? It seems like a lot of the rally is driven by institutional investment, but there seems to be some retail entering as well. Maybe we can start with Dave just to kind of describe the environment that you're seeing and how it's affecting Gemini in this case.
So it's actually been an amazing time. And like I mentioned, I'm reasonably new. So I actually joined Gemini in November, and our profile as a company from November to today is completely different, right? The amount of client interaction that we are interacting with on a daily basis, clients calling us, we're basically inundated, right? And it's all an education process. There's a big swath of clients who have been in the crypto space for a long time that are using Gemini, and they're coming back, and that business is increasing. But what's amazing is the amount of new clients of all kinds, right? Retail all the way up to the biggest institutions around the world are coming to us for education on what they need to do, what they need to know. And we say the same thing, right? I can see why this is happening, right? If you don't have a crypto strategy today, you need one quickly. And that's what we're seeing as this push. So.
Cool. Dan or Chris, you want to add something?
Yeah, I'd be happy to dive in. I mean, across the exchange landscape, all of us have seen her volumes jump up. We've seen user signups skyrocket. Kraken in January, week over week, saw a 1,000% increase in signups. And I'm sure we're not alone. I'm sure all the other great exchanges I'm on this panel with had a similar sort of rise as well. So it was just incredible to see. And what was really interesting about this bull run is we saw an institutional-led price run up, and then retail came in. So for example, Kraken ranks #1 for the keyword buy Dogecoin. Well, we're starting to see a lot of signups come from pages like that. So it's really interesting to see how this market is developing and shifting more towards retail as of now, but certainly wasn't led by retail in the beginning.
Yeah, I would echo that as well, Larry. I mean, same that Dave and Dan are saying, unprecedented volume increase. Definitely corporate led this time. We are seeing the retail inflow as well. Also, the nature of corporations that are inquiring is changing. So shifting, we've had funds and investment firms, probably like everyone here, but also now corporations directly wanting to buy Bitcoin and put it on their balance sheet. Obviously, Michael Saylor and the Elon Musk effect. But yeah, the size of those corporations also vary, not just the big corporations. So yeah, definitely, as Dan's saying, corporate led, but now retail also coming in. But we're also seeing that there's still more of a way to go for retail. So compared to 2017, really only at the beginning of the retail surge.
Yeah, this definitely feels a little bit different than the last bull run in 2017. It feels a lot more institutional. It feels like the players are here to stay. I think it's a really interesting time to be in this industry. We're seeing $1 trillion market cap for the industry. We're seeing those things change on a daily basis. And you know, the phone calls that everybody is getting are from names that you would never believe would be in crypto. And are starting to ask questions. And I think it says a lot for the teams that some of these exchanges and prime brokerages have built out in the last 3 years.
Yeah, we kind of touch on this shift from institutional led to now being more retail, and we've seen a lot of exchanges, you know, struggle to some extent with just keeping up with the interest, keeping up with signups, keeping up with you know, actually keeping the exchange up when there are massive volatility increases and overall just price swings. How are you guys dealing with that? How are you guys basically adjusting to this new demand? Is that something that you could have even foreseen like a few months ago? Because it seems like pretty much all exchanges are struggling to some extent. You know, maybe we can start with Dan this time and then kind of go around.
Yeah, so you know what's funny is internally the conversations we were having in November, December were, you know, what do we think about 10x, 100x, or 1000x scaling? You know, these are the problems we have to solve. And what's wild about this is I was at Uber from 2016 through 2017, and we were going from 10 million to 100 million monthly active users. Uber was this was a very high period of growth. And so we're looking across where Uber was in China and all these other countries, but we didn't have growth like this. I mean, this is really unprecedented from, you know, Silicon Valley mindset of like, how do you scale and build product? It's really tough to do when you have 10x signups week over week. You know, it's really intense. So, you know, we've been having this conversation for months as we start to see things pick up. It's really about like, how do we scale things internally? How do we just get the troops in there to be able to service all of our customers and be able to make sure that we are prepared? There's only so much you can do because some of the demand is just so unprecedented and it happens so quickly. There's also the issue of if you oversupply, like if you hire too many folks or scale up too much and then demand doesn't come, you're now burning through cash. So it's a really tricky problem, but we've been thinking about this for a long time and we've tried our best to handle the massive influx of demand.
Yeah, I think that all of us are understanding the new normals now. And I do think it's important for us to really understand and kind of define what an exchange means. Crypto is interesting because it really started kind of as a very small thing, and people built out these apps, they built out these services, and everybody just calls them exchanges. And the reality is, in these walls, you see brokerages, you see retail brokerages, you see institutional brokerages, you see custody services, you see you know, leverage margin products, you see the exchange matching engine, liquidity sources. You know, coming from traditional finance, those are all different things, right? And I think it's really easy to be like, oh, an exchange is down, when the reality is it might be bits and pieces. And I think that's really important to like understand as this evolves, as this industry becomes more mature. You're going to start to see institutional brokerages, you're going to see retail brokerages, you're going to see all these things separate themselves into different pools. And I think that evolution is what's going to allow us to grow. You know, I'm really interested to see how Prime Services allows crypto to become more than just some app, some exchange, some liquidity pool.
Yeah, and I think, Larry, in terms of preparation, and you know, certainly from a Bitstamp perspective, we took the lessons of 2017. We have been spending quite a bit of time on infrastructure and making sure that we're ready for the next kind of phase. And Obviously, none of us could predict exactly when that's going to happen, but we're all happy it's happening now. So a lot of technology infrastructure investments gone in over the years. We've upgraded the matching engine, which is a NASDAQ technology now. We've done a lot of work in terms of making sure all the end-to-end pieces are upgraded so that we're ready for this phase. So, and I think what's going to be really interesting for all of us, and to Dan's point, it's really hard to kind of forecast or predict, from a scaling perspective, what all of us need to do. Are we in a rally, or are we in a kind of new phase, a new normal, as Vishal said, in terms of the industry, in terms of the market? So I think, all of us are watching very closely, what those signups are looking like, what the inbound is, both retail and corporate. And I would expect, I would guess that you'd see, if we project forward in a year's time, all of our exchanges are going to look and feel very different in terms of shape and size, if this continues.
I think it was Mark Andreessen who said software is eating the world. And I think this is a very clear example of that evolution, right? For years, traditional financial companies have been thinking about automating pieces of their business, right? But the crypto exchanges are actually much less like traditional financial companies and much more like software companies, like Dan was saying about Uber. And I think you're starting to see this come together, right? Where we never close, and we have to build technology where you can, update the engine on an Indy 500 car right in the middle of the race, right? You have to do it and keep it running as it's going, right? And just keep upgrading it. And we look at the traditional exchanges, and you're like, you guys close at Fridays at 4 and then reopen on Monday? What's that like? It's like a vacation every week, so I think they're going to have to start to think about, wow, if the crypto exchanges can do this constantly, why are we closing? What is the world waiting for on the weekends? And I think that evolution is going to continue. That's going to be the important change for this whole industry, I think.
Yeah, I think we've kind of at least started seeing a little bit of it. I know LMAX Digital, who runs Digital Exchange as well, I think they started experimenting with trading FX over the weekends as well. And I think eventually we'll get to that point for sure. Another thing I wanted to touch on is the growth of futures that we've seen in the past couple of years. Back 2017 was basically BitMEX, and it was the only exchange. It was liquid, but it wasn't that large. And now we've seen an emergence of 5+ exchanges with actually decent liquidity, really good volumes. So how has that affected the spot markets in crypto? I don't know, Vishal, maybe if you want to start, if you can briefly talk about that.
Yeah, I think that, obviously I come from a volatility background. I'd love to see real options trading in crypto in a way that I could I want to see retail users selling puts, taking the premium, buying some YOLO calls, all that, that seems really interesting to me. We're just not there yet. On the futures aspect, I think that a lot of the things that happened in the regulated US space, specifically around the CME and their product sizes, I think are a little bit missized according to today's market versus 2017's market. I predict you'll see smaller sizes, mini contracts coming out from one of the DCMs out there. I think that all of them are kind of scrambling to figure out this new normal in terms of a $50,000 $50,000 Bitcoin. And having a deliverable of 5 contracts just doesn't work in today's retail world. Hard to say what's happening in the unregulated space, but I will say in the regulated space, looking at the CME open interest, you're seeing a really sizable amount of dollars being poured into that space. And if you look at it, it's a good percentage of the regulated and unregulated market. So I do see that there's a really interesting growth there.
Yeah, we sort of second that. It's huge potential for the derivatives market, and an interesting market. We certainly hear from our clients that that's a market they want to trade. So trading on Bitstamp spot, interested in derivatives. So yeah, this is definitely, as Vishal has said, looking at CME, that's pointed the way to this. I think in terms of your question, Larry, to how does this relate to spot? I think even as derivatives grow, there's going to be still that need for reliable price discovery on the spot exchanges. So we see, certainly from our clients' perspective, that they'll be wanting both capabilities in the market. So that's something we're looking at very closely.
I think the explosion of the derivatives market over the last couple of years in Bitcoin has been phenomenal. It's been really cool to see. For me, I see it as more efficient price discovery and more efficient ways to manage risk. For example, the options market is still very new, Deribit, sort of I think Vishal put it as like an unregulated, or not, maybe I'm not using the right terminology, but there's kind of the exchanges that are very, that follow a lot of the regulatory guidelines, and there's some that are a little bit more Wild West. And I think that, on the option side, we only have LedgerX, and LedgerX is a very small exchange with really large spreads. But to see their volume start to tick up is exciting. I think options are a huge area that haven't been explored by a lot of existing Bitcoin hodlers. For example, even these large, very high net worth individual retail traders, most of them don't know about selling covered calls to earn yield. So a lot of these derivative products have really exciting implications for existing holders of the currency, whether it be institutions or retail. So I'm thrilled with this space growing. At Kraken, we only have futures, but definitely having an eye towards what options could be in the future.
I think Gemini is in the same boat. We are. This is a case of, I think, where the regulators are going to actually have to catch up very quickly on this, right? Because there are, exchanges here that we wait for the regulations to be, the regulatory environment to be very clear before we can make moves. But there is a clear customer demand. And right now it's only small, right? So it's only those that would be able to get out to the environments that they can to trade derivatives that are trading them, right? If we can create a clear regulatory guidance around them and then make them available to all investors, it's going to open up to a huge swath of money being able to come into the space. So that's why I think we're still early days on all of this stuff, because it's still only with a small subsector of the clients that would potentially invest in them.
And another thing I wanted to touch on is we've seen emergence of traditional fintech companies emerging to crypto. For example, Robinhood supported crypto, I think, last year. Square is doing it really successfully with Bitcoin. Do you guys view these companies as competitors for your retail clients, or are they kind of complementary to what you're doing? Obviously, they're not going after institutionals, but how do you guys view those companies? I'm not sure if Vishal can answer here, but maybe we can go straight to Chris.
Yeah, Larry, we see them as complementary, and certainly those types of customers, those types of companies are customers of ours, as well as we're seeing an increased kind of number of requests from those companies as to how they can serve their client base with crypto. So we definitely see that as a positive trend, and yeah, definitely from a Bitstamp perspective, complementary.
Yeah, I can say that, there's only so many, Bitcoins in the world, and there's only so much liquidity that you can have. Opening up, more retail users to crypto is beneficial to everybody. I think that everybody on this panel has great liquidity books, and, we're all benefited by more participants.
And to Vishal's point earlier, in the traditional space, we've got a very distinct separation between exchanges and brokerages. In crypto, they're somewhat all combined, and it's a little bit weird. And that's where, I think on the brokerage side, yes, we would say that, both Kraken, Coinbase, and other exchanges are competitive with Robinhood and Cash App because they're a brokerage, but they don't have exchanges. So they're not, that's not where the liquidity is sourced, which is a distinctly different sort of product offering. So I think it's both complementary to where these companies like Cash App and Robinhood need to source liquidity from one of our order books, but at the same time, we are competing with them on a GUI level. So on the interface level, Cash App and Robinhood have phenomenal interfaces. And this is something at Kraken where we recognize we may not have the easiest to use experience, but that's where I kind of see that GUI landscape, the brokerage landscape, probably getting more competitive over the next few years.
I think it's it's funny, right? So if you notice, it's Cash App and it's Robinhood, right? If you think of some of the older, more traditional brokerages, they're probably having trouble trying to figure out how they can fit like 8 digits into their order keeping tools, and that's what's slowing them down. And I'm sure it's frustrating, but I think you're going to see a massive growth in the on ramps to the space. And we're at just barely $1 trillion right now. And if this is a $50 trillion business over time, there's a long runway to go. And it's not competitive, it's complementary all the way around. I think Dan brought up an interesting point, which is, and Vishal started it, this concept of us being the crypto firms all, having everything under one roof, right? Custody, clearing, the exchange, the execution. Think about the massive economies of scale that you can gain from having that under one umbrella, as opposed to 5 or 6 different firms with 5 or 6 different margins that they need to get to and 5 or 6 different sets of infrastructure. All of this will be beneficial for investors over time. And that's the real need here, right? Like margins are compressing, pricing is declining, and it's all about serving investors' needs in a better way, in a more efficient and a more, economical way. And that's where this is all leading in the end, I think.
Another thing is obviously the bigger trend of companies investing a part of their balance sheet in Bitcoin. And so I want to ask you guys about the mechanics of these trades. Again, I know Vishal can really talk specifically here, and Coinbase has been a big part of facilitating some of these trades. NYDIG has been another one. But how does they usually work? Let's say Tesla goes to you guys, and for those in the audience that don't know, how do these trades end up happening? Are you guys helping to facilitate some of these trades indirectly, or how does it work? Is it some of the OTC? Maybe we can go to Chris directly.
Yeah, Larry, it's a variety actually. So say you've got some corporations, like I've said, that will just sign up at the exchange, tend to be at the smaller end. But yeah, at the bigger end, probably, what we're seeing is going through the, prime broker route, and those orders probably hitting our exchanges. OTC is obviously another route as well. So I think the industry as a whole is well structured to service that demand at whatever level that is. And what's also interesting is that we've certainly started having the banks contact us to say they've got corporate clients who want to buy Bitcoin. Banks can't handle that transaction, and they want to deal with one of us, or be pointed in the right direction. So I think that's a really interesting trend there. But certainly from a market perspective, there's multiple routes for those corporations to interact.
Can I jump in on this for a second, Larry?
Of course. Yeah.
I think first things first, right? It starts with updating your Twitter bio that you're intending on moving. I'm joking on that one, but really, it starts at the top of the organization, right? So somebody near the top of the organization gets a mindset and has done some research and thinks, okay, this is the way we're going to move, and this is the interesting part about moving corporates in, and it becomes a directive within the organization. I think the important part of all of our firms and what we do then is educating the teams that are going to be involved, right? So yes, there's a mandate. We want to put something on our balance sheet. It's going to be 1 to 5%, whatever the number is going to be. And then everybody else underneath has to start thinking, okay, how do we implement? How do we execute? How do we manage the taxes? What's the legal ramifications for entity, and going through that, right? So I think, I know Gemini, but I'm sure all of us are building out what we think of as SWAT teams that can handle each of these sets of questions and work hand in hand with these institutions, right? The execution ends up being the last piece of that puzzle, right? So you don't start with execution and then move into thinking about custody. We're starting at the very beginning. How's this all going to look? And then after some work and some research and a lot of meetings, unfortunately, then it gets to the execution part. That's usually the last stage, right? And then of course there's another Twitter update, but
Yeah, when it comes to, at Kraken, for example, we have an OTC desk. That's a very popular method, but they can do electronic trading. So API connectivity, they can trade on a GUI level. They can also do it on with our OTC desk. Just kind of depends on what their sort of risk profile and execution profile looks like as to how they want to go execute the trade. There is, I think, talk amongst all exchanges, at least this was a more popular narrative in 2019, of the crypto prime brokerage model. I haven't heard that term used for a long time, but that was kind of an older narrative. And to Dave's point, there's a lot of other things that we need to help out these institutions when they come trade. For example, like the accounting and reconciliation aspect. My company, before we got acquired by Kraken, we were called Interchange. Interchange was a portfolio reconciliation tool. So, there's a lot of different tools that are needed by these institutional traders, and exchanges can provide some of those. But yeah, I think there's a whole laundry list of different check marks that need to be checked off.
I'll respectfully pass on this question.
Yeah, of course. Another thing, we've recently, obviously Tesla is the big one, but before it was just MicroStrategy, and people were saying it's just one company, and now that it's Tesla, it seems like this trend is unlikely to go away. How do you guys anticipate this going? I know Vishal probably has to pass again, but maybe with Dave, do you think there are other companies now because of Tesla lining up to do this, or is this going to die down at some point?
Yeah, so I sort of like where I started, right? If you run an organization today, whether it's an institutional firm, an institutional asset manager, a corporate, or whoever you are, right? You need some sort of crypto strategy, right? You need to be explaining to your board how this world may disrupt your business at some point, and you need to be thinking about it. So I actually do think that there is an evolution where a piece of balance sheets of corporations more globally will be sitting in these assets. So, I look at it as there's been a lot of research done on the portfolio management side for assets, right? Where you should be keeping, 1 to 5% of your assets in crypto within a liquid portfolio, and that would drive better returns over time. And they've shown that it's risk adjusted, better returns over 1, 3, 5, and 10-year periods. I think on the corporate side, you have to be thinking about the value of your assets and what's happening and what fiat you're keeping those assets in and how that's going to depreciate over time as well. So I think this is not just going to be digital or software firms. That's who we're seeing now, right? Tesla and MicroStrategy. But I think this is going to expand across the spectrum over time.
Yeah, Larry, like I've said on this one, we're seeing already a number of corporations just signing up with us and, looking at their profile, they're just buying and holding. And we're, definitely seeing the trend of bigger corporations coming in as well. I think, to your question, MicroStrategy had an event the other week. Michael Saylor is all over Twitter with that, and they've advertised that. From what I saw of the numbers participating, quite a large number of corporations, attending that event. And so if you've got these CFOs, CEOs, treasurers, taking the MicroStrategy playbook and, to Dave's point, being educated on, what it means to allocate to Bitcoin and where Bitcoin fits within their asset allocation, then, once that's absorbed by these corporations, we'd certainly see that trend, increasing out there in the market.
What's happened over the last couple of months has been incredible. When Michael Saylor with MicroStrategy came out and said, I'm allocating, a very large chunk of money to go buy Bitcoin with with our cash balance, this was a pretty bold, wild move. I'm about as bullish as you can get on Bitcoin, and I didn't really expect something like this to happen for a long time. And then Tesla coming out, that was really wild to see. I mean, we're seeing, there's $2.5 trillion in cash in U.S. corporate, treasury balances. What happens when 10% of that moves into Bitcoin? And I believe that Yassine over at ARK Invest did an analysis, and of course these are a little bit directional, but he expected if 10% of S&P 500 companies, if they took 10% of their, if they took 10% of their cash balance and put it into Bitcoin, Bitcoin would be at $400,000 per Bitcoin. I think Bitcoin is an incredibly attractive value prop for these corporations where they look at their cash balances in dollars, euros, yen, And they they look at how in the future, I mean, in Europe, there's negatively yielding bank accounts to where if you deposit money at the bank, you have to pay them. So that's an increasingly, increasingly makes Bitcoin an attractive investment or a way to store value, even if it is volatile. It has a very interesting risk reward profile, and it's, the 21 million hard cap is an incredibly unique feature of it.
Cool. Yeah, one more trend that I think is worth talking about is in traditional finance, we're seeing a lot of the fees kind of collapse long term. Robinhood basically did this model first, but in crypto, it seems like the fees seem at least somewhat sticky, and they're definitely higher than when you compare it to like FX or other markets. Do you guys anticipate that changing at some point? Obviously, now where there's ridiculous amount of demand, no one cares about paying fees that are slightly higher. But long term, is that going to be a sustainable model for exchanges to just keep charging those fees? Maybe we can start with Dave.
Sure. We used to have a slogan at my previous firm, but I think it's applicable in all financial markets. And that was, how do you live in a Vanguard world, right? Vanguard has been relentless for individual investors at driving fees lower. And I think that's always the case, right? This is, the markets are a little bit inefficient right now. They're new, they're limited, right? So there's room. But even when I started trading ETFs in sort of late 90s, the spreads were a mile wide, and that's why we were trading them. And now, there are no spreads in ETFs, right? They're basically, one price for everything. So fees are coming down for sure. The speed of that is probably going to happen faster than everyone here imagines. And it's the same thing with what we just saw and what we were talking about with the changes in volume from December to today, right? Everything in the crypto space is sped up dramatically. I like to say dog years, right? Every traditional year is 7 years in crypto. Fees are going to move at that same range, I think. What's also important, right, about crypto, which I think is fascinating, is, and again, we did see this in the ETF world as well. With Bitcoin and with crypto, it's one of those spaces where all size investors come together in the same set of products. So institutions, retail, corporates, market makers, volatility, right? They all come together, and they all have different uses. So it drives massive efficiency of price determination. You can really determine value, and it also drives volumes up dramatically, right? So you're going to see corporates who want to earn a yield on their holdings. Like Chris was saying, they're going to buy and hold for a long time. They're going to start looking for yield products and banking products for those holdings. And you want to see more volatility products as we get regulations up, right? And all of this efficiencies that has a natural impact on pricing as well. So it will always be better for investors over time as those prices decline.
Yeah, I'd say that I'd expect to see some innovation in pricing over time. You're going to see more exchanges adopt things that you see in derivatives, like maker credits, maybe inverted pricing, auction mechanisms. All those are going to be possible, and people are going to start to experiment. I also believe that transparency and less bespoke pricing will become a trend as well. I think we know traditionally that the cart rate of the rate card is not necessarily set on most of these exchanges. I think you're going to see a lot more transparency, less bespoke pricing, and really a focused effort to keep everybody on the same page.
The fee conversation is one that is incredibly nuanced and very interesting to see in crypto. So in the traditional financial world, all fees have dropped to zero on like spot trading. And, especially for retail now expects it. But in crypto, they're fine with paying 100 to 200 bips. So, when will that moment be when they have an attitude shift? I'm not sure. It's something really interesting. And of course, I think we've all thought deeply about now on if it's not the brokerage, for example, like there's Coinbase and then Kraken has Kraken and there's Kraken Pro. So on the brokerage side, baking in 100 to 200 bips, like same with Cash App, is the retail trader doesn't really necessarily care that much. We haven't seen a huge amount of declining trade executions based on that. On the traditional, the pro side, the maker-taker fee structure, I certainly think we'll see some innovation there over time. I think that it's really interesting in terms of the explorations we've done to look at other exchanges and how they've priced theirs. Not sure how that plays out, but I definitely agree with Vishal. There'll be some, I think, changes to how that structure works.
Yeah, not much more to add. I think everyone's sort of summed it up quite well. You know, the fee structures will evolve over time. You know, the other thing here with crypto is that, you know, we're still innovating. So as we add more products and services, you know, fee structures will change. So yeah, definitely, you know, preparing for that as well.
Just a reminder, we're going to have a Q&A session in about like 5 minutes. So keep asking us questions. I'm going to start looking into those really quickly. But next, I want to go into Dan's favorite topic, which is DeFi, and how has that affected exchanges? You know, obviously over the summer, there was a pretty big surge in demand for these DeFi tokens. Some of them kind of almost look like equity tokens in some ways, but more decentralized. So I want to just ask, like, how are you guys viewing the DeFi trend? Are you kind of watching it passively, or are you actively exploring some opportunities? We can start with Dave, maybe.
Sure. We've put a bunch of the DeFi tokens, made them available on our exchange and through our custody service. We watch that segment very closely. We think that it's going to continue to grow, and it's a great area, and there's a huge amount of education involved, though, right? There's still such a limited investor base that needs to understand what's really happening there, and we're working on that in terms of education with clients and developing content around it to help them. And we're, you know, Gemini is, I think we may be the most conservative group on the panel today. And I think in our case, we always start with not the decision about not what we can do, but what we should do, right? So each token we list, we're very meticulous about our process. We never listed like XRP as an example or something like that, right? So we go slowly, we ensure that we are well within regulatory guidelines, and that we think this is not only something we can do, but something that we should do for investors, and will it benefit them? And I think that's how we look at that space as well, but we're watching it very closely.
I can jump in on this. So my prior role was helping launch and grow USDC at Circle, and really a lot of the questions we would get early on is like, why would I use this versus anything else, or why is this important? And you know, a lot of the answers were around trading and margin and all the other things that we think about. But as we started to launch it, we started seeing the inklings of DeFi come up, and I really do think that like a lot of the panel members here are gatekeepers to DeFi, you know, whether we like it or not, and it's been great. I think it's, if anything, it's additive and not necessarily a replacement for any of our businesses. I find it super interesting. I remember I took 6 months off of crypto, and between that time it was like DeFi was kind of a thing to DeFi is everything. And I think that I'm excited to see this grow. I'm excited. I think it's additive. I think it's really complementary to a lot of our services.
Kraken definitely wants to make sure that all of the DeFi assets are available to go trade on Kraken. We're very trying to stay up to date on making sure that we've got the next new coin that people want to go trade. I think we're also similarly excited about the space, and we're certainly watching. I do think, you know, if we want to add a little bit of something exciting to the conversation, these DEXs might be competitive with exchanges, you know, so TBD on how competitive they are. However, we've all seen, as a rising tide raises all ships, all of our volumes have gone up, even while DEX volume has gone up. So I'm not sure if anyone has a good succinct thesis as to how much it might cannibalize existing volumes of CeFi products like ourselves.
Yeah, Larry, we're really excited about DeFi. I mean, one of the great things we're seeing here, and we're all part of in our different ways, is the emergence of this parallel financial system. And, you know, some really great projects out there that are innovating in a way that, you know, we never would have dreamt of. You know, even a couple of years ago, you know, I was a token before this, and we were doing some quite cool stuff, but, you know, didn't even sort of predict this. You know, we're watching it. You know, we're making plans in this area. You know, starting with like Dave and Gemini adding listings. We've got a bunch of listings coming out over the next this quarter and next quarter in support of that space. Yeah, so definitely an exciting space. And then on DEXs, yeah, it's interesting. See them as complementary, still nascent, but from what we're hearing and seeing, corporations, institutions more likely to stick with centralized exchanges for now. And then, yeah, it'll be great to see how these guys evolve.
Cool. So we have about 15 minutes left, so I'm going to start asking some of the questions from the audience. We got about 25. I think we get through like 3 or 4. One question was about different kind of markets that you guys target. So most of the exchanges on the panel, probably all of them actually, service multiple different jurisdictions, whether that be not just jurisdiction but also continent. So U.S., North America, but then also Asia, Europe, and sometimes even Africa. How do these jurisdictions overall and the trends differ in these continents? Like, for example, if you were to compare the Asian market and the North American market, what I hear, at least anecdotally, is that the Asian market is kind of more less risk averse and more looking for the long tail assets. But wondering how you guys view that on the panel. And someone asked that.
I can jump in if you want to start it off. So yeah, Gemini is available in 50 different countries and in all 50 states with everything that we do. We take a very local view of each segment of markets, right? So I spent most of my career living in the US, but then I moved to London and I ran our European business for many years. And what you need to do is you have a core set of products and you bring them into a market, and then you tailor them to basically local flavors and tastes, right? So you need a clear regulatory environment in the market in order to be able to function. And so we can go to those places. But you're right, in Asia, we look more for how do we satisfy the trading tastes of that market, where they are much more traders than investors, right? There's much less. In the US, right, the biggest potential newcomers, like we talked about, corporates and advisor-led assets over the next 5 years, right? It's a very different sale than when you're selling to traders. So you need to be able to speak differently to these different client segments all around. And then we think of Europe has a mix. They sort of have the whole gamut if we look across Europe. And then Africa and Latin America, also big regions in the world, already well-versed in crypto, and they need to carve out a clear regulatory structure there and think about how they want to make these available to people.
I think, Larry, the interesting thing with crypto is it's been global from day one. So there probably are nuances, and there are nuances between markets, but all of us here serve a global market. There pretty much isn't a market I think we all don't serve. What's changing, I guess, is one of the things Dave mentioned is the regulatory landscape. So now all of us as exchanges have to pay attention to specific market regulation, etc. But when it comes to, I think, demand for assets, interest in assets, how people trade, the types of customers we're serving, fairly consistent, I would say, across markets, nuanced in some, but like I say, the great thing with crypto is we're global.
I think when we look at Kraken, when we look globally, we want to make sure that we're empathetic with each region that we service. Oftentimes you have like a big corporate HQ that is based in XYZ country, let's say the United States, but then they're not empathetic with like the marketing content, like speaking to their local audience in Germany, Spain, and Nigeria. So with crypto, I think in Kraken, we definitely want to embrace that global nature of crypto. And so we've definitely much structured our regional teams to be empathetic towards both the product and the marketing in those regions.
Yeah, I have nothing to add, Larry. Thanks.
Cool. We got another good question about banks and how banks serving crypto exchanges, but overall just crypto businesses have evolved in the past few years. So at least for myself, I've noticed that it is now much easier to get a banking relationship if you deal with crypto. Coinbase obviously was one of the pioneers way back then, but now it seems much different. So I wonder if maybe you can start with you, Dave. If you want to talk about how that has changed, the ability to get banking as a crypto business.
I got to unmute before I speak, right? Yeah, so we have obviously Gemini has one of the only banking relationships with JP Morgan, so very large traditional bank. What I think you're seeing is acceptance among the big banks, and that's just going to get easier and easier over time. They realize with certain firms, right? Again, I think everybody here on the panel is meeting regulatory standards and runs a business that should be acceptable to the fiat banking world. And I think those ties are going to get stronger and easier over time.
I think this points to like the strong get stronger in a bull market like this. I think that, you know, being fully regulated, being one of the top tier liquidity pools, and everybody here on the panel are, I think will benefit your market. And I think we're seeing that, and we're seeing that you're going to see institutional firms wanting to pair up with those that pass the bar.
Yeah, definitely. It is becoming easier, Larry. You know, talking to banks and working with banks, and I think probably all of us are seeing improvements in that area. Still probably a little way to go for some of those banks in terms of education and understanding the space and getting their compliance folks, you know, comfortable and understanding how, you know, crypto differs to the fiat world, but improving for sure in that area. So we definitely see, you know, more banks coming into the space later this year, potentially supporting more crypto firms. And, you know, the other great thing is we've seen, you know, the payments firms step in, Visa, MasterCard, PayPal, all have initiatives, all supportive of crypto on their network. So, yeah, I see that as a great trend that's going to continue.
Larry, I think one of the hardest things with dealing with banks is waiting all weekend to get wires going. You know, it's
I mean, that's why you see, you know, pretty much all exchanges, or at least all traders, like bank at the same bank pretty much, and just like use those transfers over the weekend. But another question, and then you kind of, someone kind of touched on it, was the growth of these payment companies and their involvement in crypto. So we're seeing a massive stablecoin growth in the past year. You know, Vishal, obviously one of the people I worked on USDC, but and then there's also CBDCs that are also starting to pick up in China, but a lot of countries are working on them. And I think one trend that we'll see this year is that not all the stablecoins will actually be used for trading and for trading purposes. Some of them will maybe be used for you know, on-ramps for banks or payments. How do you guys think that will affect exchanges? Like let's say PayPal launches a stablecoin, which is something that's rumored. How will that affect how exchanges function, and will that bring in a lot of new money?
so nobody's jumping at it. I'll jump in just to look. We're gonna facilitate all of these different on ramps again, and it's going to be important. What I think is interesting is that we're talking a lot about the technical details, you know, and we will be for a while because we're in the industry. But investors don't know these details. All they're going to know is, you know, they're in something. They're not even going to know, as traditional financial assets move onto the digital rails, investors won't know the difference where their stock is trading. Right now, if you look at the GameStop controversy, right, it was all about what nobody understood what DTCC is doing, right? That nuance escapes investors, and you know, nor do they really need to. The same thing is going to happen here with CBDCs and with you know, digital dollars and things like that. Investors aren't really primed, nor do they need to know how the digital rails function behind the scenes. It just means they need to know that when they open up whatever app that is that they're using, that their money can move smoothly across them. That's going to be the most important part. And we're all going to work to just facilitate all of these different venues and the way they process money.
Yeah, I think, you know, when it comes to like user experience, people don't really care how it works in the back end. They just want to know what button to press. I mean, it's just tell me what button to press, build confidence in the interface, and then execute whatever means necessary on the back end to facilitate that interaction and have it be completed. So I think, you know, all of these different types of like either new stable coins or new types of products and services offered by traditional financial customers, I think a lot of it is geared around UX. It's kind of funny when there's still so much to be done around user experience in crypto. Like, what does an unconfirmed transaction mean to a new person in the space? I mean, on Clubhouse, I hop on there, and on Clubhouse, I on Wednesdays, I hop on the Bitcoin Club, which I think we have over 10,000 people now that subscribe to that. When I hop on there, we've got questions that people ask around, like, how do I send my Bitcoin? You know, there's some really basic stuff, or like, what happens if I do this or that? And so I think there's a ton of, you know, we could probably just freeze all technology in the space, and for the next 10 years, we could just build user experience improvements, and we would have, you know, infinity amount of like new value to be created just from that alone.
Yeah, I think we're post stablecoin war at this point, right? We know that there's definite winners, and there's definite, like, it doesn't have to be one. I think, to everyone's point here, the end user just knows a dollar, and they want to know that a dollar is a dollar is a dollar, and they want to know that they can trade in and out of it. They can use leverage, they can use margin, and it's all smooth. And I think it's up to us, all of us, to make sure it is smooth. And it's not always easy. So I think that we all have a lot of work to do.
Yeah, I think more coins is good for business, so we embrace it.
Cool. So we're kind of running towards the end. We have the last 3 minutes. I want to use this to give everyone an opportunity to just say something that they're excited about for this year, and a trend maybe that you guys are watching, and we can just close the conversation with that. We can start with Vishal and then just go down the line.
Yeah, I'm a volatility guy. I trade options. That's what I love to trade. I would love to see someone really solve that correctly. I want to see a quote-driven market, that market makers want to really quote thick books, and I want to make sure that the bid-ask spread is not something outrageous. And I want to trade options actively in this world. I'd love to see that as a trader, and as a person that belongs in crypto. I think that's something we need. I'm excited for that future.
Cool. Chris?
Yeah, I think there was a headline in the Financial Times the other day about with Elon Musk on the front, and is crypto going mainstream? So, you know, definitely excited that could we be going mainstream, and all that entails and all that brings.
I think for me, like I said before, seeing the corporate treasury start to purchase Bitcoin was an incredible moment to see. I think we're going to see a lot more of that happen. It takes a few months for corporates to get through the process internally of getting board's approval, et cetera, to go buy Bitcoin and put it on their balance sheet. But I think we're going to start to see that trend really start to pick up pace. And I think maybe in the next 12 months, this is a pretty out there sort of statement, but maybe by the end of 2021, one central bank, even if it's a tiny little central bank, might buy Bitcoin and put it on their, put it in their balance sheet. So, that would be my stretch goal for Bitcoin of 2021.
Which country is it going to be?
One that isn't important. Let's put it that way. It won't be a major one.
Cool.
I think something we all forget because we're in the financial industry is how slowly traditional money moves, right? And traditional investment dollars actually move, right? We think, we look at news constantly and the markets are moving every day. But most people, right, they actually have a job which is generally not related to the markets. They go to that job every day, and maybe one weekend a month they get a minute to look at what their funds are doing, or what the markets are doing, and what their financial situation is, right? And so they take extended amounts of time to make decisions. We spoke to one of the world's largest institutions last week, and they're starting their Bitcoin research, and they're hoping they may make their first investment at some point in 2021 or early 22, right? That's how long these things take, right? To get through the process and then for money to start moving. So I see this as way earlier than most people do. I think this is sort of a niche, and I saw this with ETFs as well. When I moved over to WisdomTree, it was a startup, and people were like, what's an EFT, right? And this is just 10 years ago, when we all knew what they were because we were in the industry, right? And even today, we still see those questions. So there's a huge amount of adoption curve still ahead of us. I think, and I also see a lot of fear still. So people who have lived through the previous crypto winter are like, yeah, 50,000 is great, but we could be at 25 next month. I'm still a little nervous about that. So I'm going to go slow in my hiring and things like that. I don't think we're going to experience that again. I think this is the beginning of a more sort of secular movement into cryptocurrencies. And then I think of Bitcoin as the gateway, right? It's just the first stop. As people move their financial lives into the digital asset space, they're going to look for other investments. You know, they will broaden out. They start with Bitcoin, they move to Ethereum, and then, you know, next week they're dipping their toes in DeFi and things like that. So this is a broad adoption, and it's going to happen more slowly than we think, but bigger than we imagine.
All right, thanks a lot. So I really appreciate everyone's time. Vishal, thanks a lot for sharing your thoughts despite the quiet period. Chris, Dan, and Dave, I think it was a really good conversation. I hope all the people in the audience enjoyed it. And yeah, really appreciate everyone's time. Have a great day, everyone.
Thank you.
Thanks, everyone.
Thank you. Bye, guys.